This week, CBS MoneyWatch says that these are the reverse mortgage red flags that homeowners should watch for. But are they?
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
Welcome back to the Industry Leader Update. Despite incidents of predatory lending practices and also inappropriate loan placement in the traditional mortgage lending market, those are generally going to be ignored by the national media. When's the last time you heard one? But the reverse mortgage, it still remains a consistent target of criticism and sometimes unfounded allegations. Are we surprised? No, but it is important to know the narrative that is being presented to the American homeowner. Now, we had a recent column that was generally accurate in CBS News MoneyWatch, and it was written by columnist Kelly Ernst. And she writes, reverse mortgages can be a great way for seniors to access the equity in their homes to generate retirement income or cover expenses like medical bills. Unfortunately, they've also become a prime target for scammers who are eager to take advantage of this product's popularity to exploit older homeowners. To guard against potential fraud, Ernst suggests that the homeowners look for the following red flags. And first are unsolicited offers. Ernst cautions, if you receive an unsolicited call, email, or letter offering a reverse mortgage, be suspicious. Reputable reverse mortgage lenders won't contact you with an offer for a reverse mortgage without having requested the information. But are unsolicited direct mail pieces, emails, or even phone calls truly a red flag? Consider for just a moment the unsolicited mail pieces and emails that you're receiving. They're likely from a local car dealership, a real estate agency, grocery store, or a health insurance company. Unsolicited marketing pieces, they're the backbone of marketing because they're meant to do one thing: generate interest in that product and to hopefully generate a qualified lead. Myself and most industry professionals would strongly disagree that unsolicited offers are in fact a red flag. But the next red flag I would wholeheartedly agree with, and that is pushy sales tactics. If a reverse mortgage originator, or for that matter, a car salesman or insurance agent, is pushing someone hard to make a decision that they're not ready to make, then they should proceed with caution, or even better, completely disengage. That is a sure sign that the salesperson's interests are much more important than that of the prospect, or even finding a suitable product that meets their needs. When it comes to reverse mortgages, pushy sales tactics are actually highly ineffective. And that is because in part of the required counseling prior to taking an application or ordering an appraisal. In fact, in California, which is, by the way, the nation's largest source of HECM endorsements, no application can be accepted or any fees assessed until 7 days after the HECM counseling date. The third red flag are upfront fees or unexplained costs. Now, we can agree that any hidden fees are certainly a red flag. However, the upfront cost of a home equity conversion mortgage, such as counseling or the appraisal, those are clearly disclosed to a potential borrower. And the fourth red flag is one that you and every reverse mortgage professional should be avoiding. If not for the ethical reasons, then at least for the legal exposure that it creates. That is, too good to be true promises. Sadly, even today, some unscrupulous reverse mortgage originators and brokers are continuing to advertise claims such as, you can never run out of money, or you can stay in your home as long as you want, or even worse, misrepresenting the loan as a quote-unquote government benefit. The columnist closes with this valuable piece of advice. One of the best ways to avoid a reverse mortgage scam is to thoroughly vet any lender you're thinking of working with. Check with the National Reverse Mortgage Lenders Association and the Better Business Bureau to ensure that it has the required licenses and registrations. Read customer reviews and ratings to learn what other homeowners think about the lender. While we cannot single-handedly change just how the media presents the reverse mortgage or perceives it, each of us can do our part as individuals by upholding the highest standards of ethical sales and marketing practices, and also promptly reporting those who are not following ethical guidelines and legal ones to the appropriate agencies and NORMLA. As we close today, we're not going to forget to honor the brave Americans who died on 9/11, their families, and the first responders. Never forget. Now, what are your thoughts on these reverse mortgage red flags, especially number 1, referring to unsolicited offers or marketing? You can share your comments below. Also, please share this video on LinkedIn. Thanks to those who did the same for last week's episode. And don't forget, we have a YouTube channel that you can subscribe to so you never miss an upcoming episode. And each and every week, you can catch up on your reverse mortgage news. With a twist, I bring you some interesting stories that are related to reverse mortgages. We're now on Spotify. Apple users can listen and subscribe on iTunes. And of course, we're on Podbean. Thanks again for joining us, and be sure to return next week for more reverse mortgage news on the go.